What could trigger the great financial meltdown? What is the fuse that could set it all off? What could happen globally? I'm Michael Justice, and this is the Dollar Talks channel. Welcome to my financial crime investigative news program. Subscribe to the channel and find out all the most shocking financial news. The crisis in commercial real estate is an ominous shadow hanging over the global economy. Is it really possible that it is the fuse that will set off the great financial meltdown? Let's take a closer look at the factors fueling this worrisome situation. Shares of publicly traded commercial real estate companies are already experiencing sharp declines. But this is only the beginning. Most commercial real estate is privately owned, and appraisals can take months, if not years. It reflects fluctuations in interest rates and changes in supply and demand. In the United Kingdom, property asset values have experienced an unprecedented decline following the financial crisis, which led to a surge in bond yields. In the United States, the situation for commercial offices is even more critical, with owners forced to divest properties that are worth less than the debt that secures them. In Europe, bonds backed by real estate are trading at distressed levels because of concerns that owners cannot raise enough from asset sales to cover the $165 billion in debt maturing by the end of 2026. In Hong Kong, a record 13 million square feet of office space was empty in June alone. But what are the causes of this crisis in commercial real estate? What is triggering a chain of events that could lead to a global financial collapse? The number one answer is the cost of borrowing. The sudden rise in interest rates by central banks has caused risk-free government bond yields to rise. As a result, commercial real estate investors demand higher yields to justify owning illiquid assets such as commercial real estate. However, rising rents can only partially offset the impact on valuations, while the magnitude and speed of rate hikes cancel out landlords' efforts. In addition, the decline in valuations is a problem that hampers the ability of real estate companies to borrow, as the value of their assets declines, as their relative debt increases, putting them at risk of violating the terms of their loans. To avoid this, companies may need to inject more capital or borrow at higher rates, provided there is enough rental income to do so. Otherwise, they may be forced to sell in a declining market, where buyers demand steep discounts. These discounted sales lead to further declines in valuations, creating a vicious cycle that feeds on itself. But there are significant differences between regions. Europe is most affected by the rate hike, because initial rates were lower before the crisis, and the blow inflicted on valuations is more significant if the initial yield is lower. In the United States, on the other hand, the supply of new empty buildings and the widespread adoption of work from home has led to an increase in empty office space. And this has made the situation in U.S. commercial real estate more critical than in Europe. Could the crisis in commercial real estate be the fuse that will set off the great financial crash? While the situation is complex and may vary from region to region, the risk of a larger shakeup that hits lending institutions and leaves cities full of empty buildings is palpable. We must closely monitor how events unfold. Only time will tell whether the corrective measures and economic policies adopted will be sufficient to prevent an impending global recession. I'm Michael Justice, and this is just the beginning of our journey. Subscribe to our channel and turn on notifications by clicking on the bell so you don't miss the next episode, because the answers may be more shocking than you imagine.